Welcome in this video. Xcn coin trend broken. Where is the direction? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. There had been a well-defined descending trend structure on the chart that had maintained its influence for a long time and was closely followed by investors. This trend acted as a strong resistance line, particularly exerting pressure on price movements and consistently limiting buyers' upward attempts. Although short-term upward moves were observed, this descending trend line had been tested multiple times without being broken, continuing to push the price downward. However, recent price action has clearly revealed that this technical structure is beginning to weaken, signaling a potential shift in market direction. Especially with the latest wave, the price once again approached this descending trend line, reaching a highly critical point. This level was not only technically significant, but also psychologically important, closely watched by investors. Market participants who had seen the price retreat from this line many times before may have expected a similar pullback this time as well. However, the situation unfolded differently. This time, the price managed to break above the trend line with strong volume. This breakout can be considered highly meaningful in terms of technical analysis, as trend lines represent not only price movement, but also overall market sentiment and direction. Therefore, a trendline breakout carries a strong indication that the trend has potentially ended. Following this successful breakout, the price turning back upward shows that buyers are beginning to take control and that the market may be entering a new bullish cycle. However, one of the most important details to pay attention to at this stage is the upcoming retest process. In technical analysis, after a trend line is broken to the upside, it is quite normal and healthy for the price to pull back and test this level again. This helps ensure that any new uptrend is built on a solid foundation. The current technical setup is pointing exactly to this. The price is pulling back in a controlled manner toward the broken descending trend line and is in the process of retesting this area. This test phase carries important signals for investors, as the resulting price action can offer insights into how strong any future upward movement might be. If the price holds at this level and gains upward momentum again, it confirms the trend reversal and may attract more buyers to the market. In short, this is a confirmation move and is highly significant for the development of a healthy uptrend. Additionally, the fact that this retest move is occurring with low volume suggests that sellers are starting to weaken and selling pressure is diminishing. This is another positive factor that may support the price in holding this level. A subsequent upward reaction following the retest could mark the beginning of a new rally, with the price expected to target previous resistance levels. At this point, it should also be noted that the trend line, which previously acted as resistance, has now become a support level. This phenomenon, known as a support-resistance flip in technical analysis, is a clear indicator of a shift in market psychology. The area that previously attracted sellers has now become a base for buyers. This transformation should be seen as a positive development for investors. As long as the price remains above this level, the bullish outlook remains technically valid. But we can't base our analysis on trend lines alone. Let's take a look at other metrics as well. Stay tuned. When closely examining the chart, a clearly defined short-term Elliott wave structure can be observed. Based on this theory, price movements tend to unfold in specific cycles, typically consisting of 5 main impulse waves, followed by 3 corrective waves. In the current scenario, short-term price action appears to support this theory. The first wave generally signals the beginning of a new upward trend in the market. This initial movement may not yet be fully confirmed by investors, as overall market sentiment remains cautious. However, this first wave indicates the start of a shift. Indeed, the first wave in the current structure has formed in line with this typical pattern, followed by a second wave that reflects a brief corrective phase after the initial move. The second wave usually represents a period of uncertainty and short-term profit-taking. Investors act cautiously after the initial rise, which causes a pullback in price. What's important here is that this pullback is not driven by panic selling, but rather is a healthy corrective process. Currently, it appears that the second wave has completed and the price is entering a new upward phase, specifically, the third Elliott wave. This third wave is typically the strongest and most aggressive move in the theory, attracting the most investor interest. At this point, the market generally acknowledges that a reversal has occurred, and momentum shifts strongly to the upside. In technical analysis literature, third waves are often the longest and most impactful in terms of both duration and price movement. Therefore, the current structure evolving into a third wave is quite promising and carries strong bullish potential. According to Fibonacci analysis, the target levels for the third wave are typically 1/618 times the length of the first wave. However, in strong markets, this projection can extend even further, reaching levels such as 272. The current technical setup aligns precisely with these projections. Based on measurements of the first wave, projections suggest that the price has high potential to initially reach the 1618 Fibonacci level and, if strong momentum continues, possibly extend to the 2272 level. The fact that these targets are technically verifiable levels serves as a strong source of motivation for investors. These projections are not merely speculative, they are supported by the price's historical behavior, momentum structure, and market psychology. Particularly if volume analysis supports this process, meaning that significant increases in trading volume are observed at the start of the third wave. This acts as a key confirmation that the third wave is underway. With the beginning of the third wave, increased investor interest is also expected. While the second wave typically sees market hesitation, the third wave is when investor appetite returns and positions are re-entered. This increases liquidity and allows the price to reach target levels more quickly. Experiencing this process in the short term is generating highly positive signals for investors. Moreover, when analyzing past short-term Elliott wave cycles with similar structures, it's often observed that the third wave easily surpasses previous resistance levels and drives the price to new highs. In this context, it seems quite likely that the current third wave formation will also break through previous resistance levels. When supported by historical technical analysis data, such structures typically result in successful upward trends. Professional investors focused on trend-based strategies tend to place significant importance on these third wave signals and often move to take aggressive positions. RSI is an extremely valuable technical analysis indicator that gives us important information about the momentum and strength of the price and helps us understand the trading behavior of market participants. In the current chart, there is a very striking and potentially strong structure on the RSI. In particular, the falling trend line that has formed on the RSI is currently in a critical zone, and a break of this line could act as a very positive catalyst for the price. This downtrend in the RSI indicator is actually a reflection of recent price fluctuations. As the price has been fluctuating up and down, the RSI has been trending in a similar fashion. However, what needs to be emphasized here is that this downtrend is now very close to potentially coming to an end. This is because the RSI indicator is currently hovering very close to this falling trend line, and from a graphical point of view, the probability of a strong breakout at this level seems quite high. In general, trend lines that form on the RSI can work as meaningful support and resistance levels, just like on price charts. When the RSI breaks a trend line, it often generates a leading signal that the price will move in a similar direction. When this trend is broken, the price rises even more sharply. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.